Welcome to TheoTrade. This is Don Kaufman. Here we are. It's February 15th, 2017. We still have about 40 minutes left to the trading day. And what this day has ultimately become, buy anything at any price whatsoever. Now, you've probably felt that way kind of day in and day out as the market kind of charges to the upside, but there's a very definitive reason that I'm recording this with still about 40 minutes left to play in the trading period over here. And that is, again, today's trading session has a bit of a different tone, a different feel to it, as just in the last few minutes, you can actually see volume in the S&P futures is starting to explode higher with the markets rallying. Moreover, and again, I want to point this out, and I really wanted to record this again while the market was live over here, regardless of where the market ends up closing on the day, to pick up a couple of intraday ideas that some of you might be looking at. And moreover, I'm going to reference in just a couple of moments the SPX for the entire week of trade over here. So bear with me for a moment. Just the last few minutes, we've seen extraordinary volume levels inside of the S&P futures, indicative, okay, of pretty major hedging activity and or shorts that are covering. But in the last few minutes, again, when you see 10,000 contracts trade in the S&P futures in a 1 minute candle, and that's exactly what we're looking at, 1 day, 1 minute over here, you see 10,000 contracts. I mean, that's like all hands on deck, traders just chucking everything they have at the marketplace to see 10,000 contracts. And in a much more prototypical marketplace, the only time you see 10,000 contracts trade in a 1 minute is right at the open of any trading session, and pretty much any trading day. If I zoom out over here, any trading day, you'll see, oh, huge burst of volume right at the open or right at the close, okay? And again, it's rare to see, you know, upwards of 10,000 contracts trade in multiple minutes simultaneously here, you know, seeing big volume out in the bonds. But what really stands out is we have the S&Ps kind of exploding, almost frothing, if you will, to the upside. And we have all the volatility products that are up. Now, there happened to be a VIX settlement today, so maybe I'll count out the VIX. But yes, the VIX is up with the market up and up big. I mean, we're up 0.5% right now, but we're looking at the VIX. All right, this is substantially higher. It's, 7-8% higher. And I'm sure a lot of people are going to point that out. What I'll also point out, though, is the volatility futures. As the day has progressed, and the volatility futures, if you've never looked at them before, it's the /VX. This is the H7 contract. What is the H7 contract? Has 35 days left until expiration. It's up some 45 cents. It's trading some size out there, 130,000 contracts. It too has been on the bid. That means there's buyers of volatility today with the market up. Now, lots of traders, they're always looking for a sign of a top. Believe me, right now, okay, I'm short this market. I am looking for a sign of a top. Don't look too hard over there, because markets that are overbought is a term I never want to hear. I mean, listen, markets can grind higher, into infinity when, for the most part, the Fed is providing capital for next to nothing, and huge portions of the world are in negative interest rate territory. Nevertheless, this is one of the first signs we've actually seen of volatility really on the rise with the markets higher. Now, let me turn the tables on you and get away from some intraday trade, and we're going to go take a look specifically here at the SPX. Now, I have quite a lot drawn on the chart over here, and I'm going to explain this kind of in context as we go along. I'm just going to zoom in. What you're looking at and what I've kind of mapped out. Let me go ahead and close up this left side bar. What I've kind of mapped out for you is the expected move for the week. Now, for those of you unaware of what the expected move is, I'll kind of script this for just a moment, okay? In any given marketplace that has options, we're able to determine what's called expected move. We'll call it the EM. And this trading week, specific to the SPX, and the SPX is an options only product, the expected move is plus or minus $27. Now, how do you arrive at that? Well, for the most part, the complicated answer is you can take the implied volatilities, times the square root of the number of trading days, divided by the square root of 365, multiply again the volatility times whatever the SPX is, yada, yada, yada. It's about a $27 expected move. The easiest way to derive expected move is to simply go out and look at the at-the-money call, the at-the-money put. Now, I did just that. Okay, I did just that. So I went over to the Analyze tab here on thinkorswim, and I looked at options that were, again, first of all, I backed up the date over here, and I backed up the date to Sunday's trading day. That was showing February 10th. That was the close on February 10th, which was last Friday. Again, today is the 15th. We're only halfway through the week. Okay, so why am I backing up over here? Well, in the SPX, the entire week, all right, was showing about a $22 expected move. But because this is a primary expiration week, okay, in the SPX, the last trading day is actually Thursday. It goes off of the opening settlement Friday. I know that's kind of confusing. So rather than use the SPX, I use the spiders to derive the expected move. Now the spiders, okay, are displaying in this case right around about a $2.70 expected move. That translates to about a $27 expected move inside of the SPX. The SPX, right, is where I just drew those lines. Now let me explain it. So we'll go back over to the chart. This was, again, right here, and you can see I've got expected move of 27 pointing directly to February 10th. So ultimately, starting on Monday of this week, we were not expecting much more, okay, than a $27 move in either direction. Now, bear with me as I explain a little bit about expected move, because this is incredibly important in recent trade. Okay, what expected move says, all right, it's based on where we were from Friday's close. And if you're curious where we were in Friday's close, again, just glance over here, it was 23.16. That's exactly where I kind of drew this arrow over here. It's like 23.16. So what it ultimately says is we're capable of moving about $27 higher, okay, or $27 lower, which I already marked ultimately on the screen there, $27 higher, $27 lower. Great, and that's all marked from roughly 23.16. Okay. First and foremost, just because the expected move is 27 doesn't mean we can't move more than 27, because right now, here we are right now. We've already moved outside of expectations. Expected move is a probability of expiring, okay? Probability of expiring inside a given range between now, okay, and the expiration. But when's the expiration? It's Friday. But what I thought was incredibly important here is we've actually surpassed the expected move. Now, we have not done this much lately. Most of the recent expirations that we've seen, okay, we've been well inside of the expected move, okay? And again, you have to come all the way back here to the election to see us really get smoked through the expected move. But the election had a much higher expected move because we were expecting a much broader move on the marketplace. Okay, so starting off this week with a $27 expected move, there's a pretty good probability we're going to come back inside of it. Okay, as the week progresses, I want everybody to keep an eye on, all right, ultimately, what level inside of the S&Ps. Well, here we are inside of the SPX right now. We're trading 23.50. Watch for 22.43. Okay, that would mean the S&P is coming in by a whopping 7 points. Again, just because the expected move has been exceeded, okay, doesn't necessarily mean anything, because the probability of us going outside the expected move and then coming back in is extremely high. But by Friday, look for the nice round number here, again, of 22.43. We have been kind of week in and week out pegging the outside edge of these expected moves. And you can see I've already drawn on the chart over here, ultimately kind of X marks the spot over here, and that happens to be, well, I put the line directly on Friday's expiration day, okay, which happens to be none other than, what, February 17th. All right, look for us right in and around. Doesn't mean that we're going to go directly to 22.43, but there's an extremely high probability that we're stretched at this point and come back inside the 2243 level. Look for it as the week progresses. Again, the markets throughout the course of the trading day, it's been frothy out there. Seeing the VIX elevated, okay, in this type of trade definitely is eyebrow raising. Seeing the volatility futures along with it, okay, adds some more question marks. You have a couple of key stocks, including like Facebook and Google, that aren't even up today. It kind of feels like Apple on an intraday basis, possibly even peaked out early, faded, is trying to rally back. You know, you look at the S&Ps at this point, up 11, and you have to sit back and ask yourself, what the heck is actually driving the market? So throughout the course of the day, I keep cruising over to the advanced decline line, which, again, it isn't that great. Okay, then I brought up individual sectors over here, and the sectors themselves, okay, each day they're rotating capital. It's like musical chairs. Yesterday, it was the financials, which are still relatively strong today. Today, it's healthcare. You know, there was going to be a conglomerate of healthcare companies together. Now healthcare has broken apart. All right, we're still playing this game again of musical chairs in terms of allocations out there. Moreover, again, be careful as these days progress. All right, volatility up with the market up. I wouldn't say it's an occurrence, okay, that is rare, but both the VIX up, volatility futures up, and the market up drastically is extremely rare. Okay, think about that. Enjoy the evening. Thanks everybody for joining us here at TheoTrade.